I'm Rob Sarney, and you're listening to What the Heck Fintech, where you'll experience and learn that Fintech is Fin Life. Let's get started. Welcome, everybody. You have an unbelievable guest speaker for you today. I am speaking to a very near and dear Fintech friend of mine, and just friend, Ian Sheridan. And he has so much, and he's going to take this to a whole nother angle. He grew up in Fintech, and he's going to explain all that. He's a co-founder of Vestigo Ventures. They're focused on AI and Fintech and so much more. I mean, you're gonna get some really great, unbelievable, life-changing stories. Now, one little thing I'd like to add to this too is, and Ian, I don't think Ian knows this, but I met Ian back 6 years ago, and when I joined WPI, and he recommended me to, and WPI actually recommended WPI, and I happened to be at WPI at the time, recommended you got to have WPI because he's done work with WPI before. Just that great, simple, act of kindness and how he introduced me to Mass FinTech Hub, that changed the trajectory of my retirement. And I was at Fidelity and then became the professor job was a retirement job for me. And he just changed that one act of unbelievable kindness, changed my whole trajectory of my retirement and what I'm doing. And is really the foundation of why I'm even doing this podcast, because all the unbelievable things Ian did for me throughout the years and the collaboration we've done. So that's why he's such a near and dear friend of mine, and I'm so excited to have him here. So Ian, I can't do it justice. You'll do an unbelievable job. How did you get? I mean, we're similar ages. How did you get to this fintech space, and how did you grow up here? I'd love to hear that story.
Sure. First of all, thank you for that kind introduction and overstated, by the way. So you have an unbelievable career, and what you did at WPI for those students was inspiring to all of us in the ecosystem. So thank you for that leadership there, which has transpired into Mass FinTech Hub, which has cascaded throughout the state and throughout the entire VC ecosystem. And we'll come back to that, the Boston ecosystem. But you asked me where I started. So you said I'm as old as you are, which is, I just reflected on that this morning in advance of this. And I tracked my career. My first job was at the age of 12. Let's not go that far. But my first real job in college was a summer intern on the New York Stock Exchange. And I had co-called all of Lower Manhattan during my freshman summer to see if I could get a job on Wall Street. Didn't have a resume, didn't have a proper business attire, but knocked on a lot of doors. In those days, you could cold call into New York. You could read the names of managers on the directories in the lobby, and you could start conversations. And I was fortunate enough to meet a gentleman by the name of George Cerise, who is the specialist for RJR Nabisco, and was on the specialist on the New York Stock Exchange. After a lot of interaction with him, that is probably a story for another time, he brought me down to the New York Stock Exchange. He showed me, gave me a tour before the market opened, and then said, the problem, Mr. Sheridan or Ian, is you're too tall to work for me. The specialists, the juniors behind the screens these were before flat screen TVs. So the TVs that there were monitors that were being used were, remember those big 3-foot, extensions behind them? So to work in the pit of the New York Stock Exchange to help the specialists run the book, it would be like working in a submarine. So he looked at me and he said, you got a lot of balls coming down here to do all this. You've seen the tour, now go home. I said, no, sir, I'm here. I need to work here. And he actually introduced me to a number of floor specialists. Talk about an act of kindness, right? Which is always paying it forward. He introduced me to what was at the time called the $2 broker, which was somebody who leased a seat on the New York Stock Exchange. So I became a gopher, and then I became a wire clerk. I had 60 institutional wires, and I would take orders back in the day of buys and sells, and then beat the broker on the floor to execute the trade. That's where the New York Stock Exchange was at that time. And in advance of this, I just wanted to look back, what was the down? I remember it being under 2,000, which it was. and it's increased. It's over 41,000 today. That's a 2,000+% increase over time, which is incredible.
Wow.
But the relevance of the story for today's conversation was, at that time, I was still in college. I was seeing more income than I could imagine in that type of atmosphere. I forget what I was paid, but for a kid at 17, it turned my head, to say the least. And so I thought, I'm going to quit college. I'm just going to be this wire clerk, because I got the cadence. It was like being a sophisticated waiter, in a sense that you're taking information, you're retaining that information, you're absorbing the actions around you and the behaviors to kind of bring back that intelligence to the institutional broker, which we'd say is upstairs on the phone. And the $2 broker I worked for, God bless him, Henry Lee, had a seat on the exchange for multiple generations of his family. And he looked at me and he said, Ian, if you make that decision, you will not work for me. You will be on your own. But if you stayed through college, I'll help you when you graduate, which ultimately got me to Goldman Sachs. So relationships really matter. The other piece that was cool, a little trivia, it was the first time, it was either 87 or 88, maybe it was 87, before the market crashed then, the first computerized trade went through. And I'll never forget it, because we would watch the ticker tape around the New York Stock Exchange, and it does create a momentum. And there's a cadence on the floor of the New York Stock Exchange. You pick up from the humanity getting excited or reacting to the different things that would occur across the day. And I'll never forget Henry grabbed me and said, look, and he pointed to that trade, and it might have been 10,000 shares. And he said, that's why you need to graduate. Everybody here is a dinosaur. They just don't know it yet. Now, the New York Stock Exchange still exists, and it's modernized, and I don't mean to take away from its value. It's an important part of our financial system. But then it was manual, it was beeper, it was phones, it was paper orders. I'd start the day, the floor would be a gymnasium floor, spotless wooden floor. And by the midday, end of day, I was ankle deep in trade tickets that we had written and, either time-stamped and collected or threw on the floor because they didn't get executed. So
wow.
That's where I started, which puts me 40 years in the business, or 39 years in the business.
One thing I wanted to jump in there with, because I got to be late in my life. I want to talk about like 3 or 4 years ago on the New York Stock Exchange. We brought a bus of WPI students for the investment club, which you guest spoke at before, WPI Investment Club, and I was amazed. I never saw it the old, except in movies, right? The exact thing you're showing and talking about. But I remember walking on the floor, and I'm like, oh my, this is fintech in the to the unbelievable level. I was looking around, it's an amazement, and just the buzz and all that press there, and and you're right there, right in front, looking up at and the bell, and it was just like for opening bell too. It was just crazy. So, and I just think of that story. I'm like, I bet you that impression that those students got, maybe they'll be inspired like you did, but you actually had deeper inspiration because of the great connection story you just told. But that just got me thinking of a story that I haven't thought about in a little while. Wow.
Well, I think about our careers, both our careers tracked at a time when American workers were just becoming savers and investors, right? It was the defined benefit was the primary way in which American workers retired. Wall Street was certainly growing, and the Dow at 1,800, I think was the number in 86. Mutual funds were certainly available, but for high net worth individuals. And then that turned, right? ERISA came out. All of a sudden, the Wall Street asset management, insurance infrastructure geared up for retirement plans, 401k primarily. There were other forms as well in those early days. But that's when American workers started driving assets at a massive level into the markets. And mutual funds, I remember my biggest tech challenge in the 80s and 90s was, could we get our new mutual fund that we're launching for our retirement plan business in the Wall Street Journal, so that people would know where it is and how it's tracking, right? I forget what the number was. It'd be interesting to ask AI today, what was the cadence of weekly mutual fund formations in the 80s and 90s, but it exploded, right? And so our systems, our technology, and thank I always remember Henry Lee pointing to that first computerized trade, automated trade, and telling me I needed to, always be advancing and learning and staying curious. But those systems we grew up with have changed. They were transaction battleship type systems, not designed for the high fidelity data and interaction and analytics that we use today. And they certainly have evolved, and they're going to continue to evolve, which always brought me into the excitement of Vestigo, of becoming part of that team.
Wow, that's an awesome story. I love that story. To keep that story going, I'd love to hear, how did you co-founded with Mark Cassidy, Vestigo Ventures? How did that come to be? Were you guys both having a couple beers, like, we should do this, or like what was it like? How did this all happen? Because you guys are doing unbelievable things.
Yeah, I mean, maybe I could describe it as the act of kindness you described with you and I interacting. It was really Mark's vision. He was running LPL at the time, and I think he was thinking about tomorrow, today, which he is so very good at, and seeing around the next corner, and really had the vision to start Vestigo. And he had this great relationship with Dave Blunden, our other founder. And Dave, we always call the cool one, because MIT, neural networks, predictive analytics. He was really working with the professors teaching AI at MIT. And he came out of MIT with a cohort of really brilliant people who understood data was the next oil, the next major asset to build on. And it was the kind of the middle of the .com era. But it was Dave and Mark had this amazing relationship over 30 years. I've known Mark since I was at ADP. When I was a corporate executive, I ran marketing and some business development activities, and we were trying to convince Wall Street at that time that ADP was more than payroll. So we were building the retirement business. We were acquiring defined benefit businesses, executive comp businesses. And that led me to Boston from New Jersey to look at the Scudder retirement businesses at that time, which Mark came out of Scudder and then was running Deutsche Asset Management. So that's how we met. Our teams interacted. I just was really impressed with the way Mark led teams. And just through that interaction, really over 30 years ago, as I think about the birth of my first child, is right when we met, we stayed connected primarily through the Tiburon CEO Summit. So I'd see Mark once a year, and I'd watch LPL as an analyst. Was really important as we talked about the evolution of technology, the growth of our industry. At that time, LPL might have been, and don't quote me on it, but it might have been 1,000 brokers or 500 advisors. And we tracked, and Schwab had just opened. I think it had 50 employees at the time. So we were tracking the birth of the RIA and the growth of American distribution systems in asset management to understand, one, where we could bring our products and services for distribution, but two, to understand the changing dynamics that were absolutely occurring during that time. And so I remember when LPL started to train RIAs, and I'd watch that number as it would be publicly reported from time to time, say, okay, this is really interesting. Charles Schwab is forming. So that formation of the advisory network that we see today in RIAs and other wealth management firms, we've seen that whole change, right? You were there at Fidelity, was really, really interesting. So anyway, and I deviated, but to come back to Vestigo Ventures, it was Mark who had the vision, and he wanted to give back to the Boston ecosystem. So that was a core ethos to Vestigo. Dave had this amazing set of companies. I call them the cool one because he created over 26 companies in data and predictive analytics that were just phenomenal. And he had the vision to build his first really lab, Kogo Labs, pretty much across the street from MIT. And at one level, it ran an ad tech business where it was able to support itself and run data and grow its assets from a data perspective. And then he would incubate companies under Link Ventures, which we're part of today. We'll come back to that. But so Dave really had that vision of data being the new oil and to build companies around it. Today, Kogo has evolved to Link Studios, which still has the ethos of building startups around AI, but it's all MIT and HBS founders coming in with these new ideas. But Vestigo was formed with three of us with the idea that we would be part of the Boston ecosystem, part of the national ecosystem in early stage investing in fintech, and finding great, at that time it was machine learning, AI type companies. And so we've come a long way. First fund is an 8-year vintage from 2017. Second fund is well formed and fully allocated to portfolio companies. And the third fund really has moved from Vestigo to a pure AI focus with Link Ventures and the MIT ecosystem. So we've come a long way. That gives you the background story.
Yeah, that's wow. Cause we got to know each other in 2019, and that is the growth I've seen from 2019 to now is like unbelievable, and your portfolio and how you do things, it's like amazing. Yeah. So with that amazing part, let's piggyback on that. What's a day in the life at Vestigo Ventures? I know you meet so many geniuses and unbelievable startups, and you coach them and help them, and what's that like? That must just be fun every day. And I know how you do something. You have a very unique approach to find and to meet those startups too, which I don't know if you can share. It might be secret squirrel stuff.
No,
but I'd love to hear it.
Every VC has its methodology, and there's similar playbooks that I found across the board. I think what made us distinctive early on was the team itself. So you start, and just as we as investors start with team. For Vestigo, we spent a lot of time early on, thinking about what is our ethos, what is our culture going to be, and our value proposition. And so we spent a lot of time establishing that. And the idea was to build a multi-generational team that reflected the markets that we serve, the people that we invest in. And so we started there with data as a center point of being the real truth. The other piece was, bringing our experience in a realistic way. And of course, we learn with data, you get humbled about your experience very quickly as you think what you think you experienced or what you might happen again, it's necessarily not going to happen the exact same way. And data shows you that path. So we really started out with team and building that team, and we're proud of the folks who have been part of Vestigo and now are in the Link third fund, working the latest AI. But the journey has been for me 10 years, because there was about 2 years of early spade work of trying to figure out what are we going to be, how are we going to leverage the data assets that Kogo Labs have, and that was our connection to WPI, by the way.
Right.
So Dave had built an amazing set of algorithmic tools that fell into what I'd call the predictive analytics side of working with data. And we saw that capability of that Kogo had to look across the North American data landscape, across the internet, and really see certain signals as it related to URLs showing the potential to go viral. And so that was really interesting to us, and it would create a massive haystack of companies that were showing signal, from those companies that were publicly traded all the way down to the early startup that just hung up a URL address or a .com address now, lots of different extensions. So that haystack was really interesting. And so what we did with our team and the help of the university system that we participated with through interns, we built a set of algorithms, 8 years ago. We called it XPLR, but it was really 5 mathematical models that would look at that haystack of companies Kogo would find showing potential signal, and it would start to be trained by us. We'd look at that data and line by line, and we'd say it would source a URL, and each team member would get a pile on a spreadsheet, and we would score it on a scale of 1 to 5 according to our thesis and our lens of experience. So a couple things happened. One, we trained the data. The training got interesting because you began to see the bias happening. So it was just 3 founders of similar and diverse backgrounds, but similar. You'd see certain output. But as you brought in younger associates with different lenses, you started to feel that bias take place as well. And so the mashup there at the human level, working with the data, created really interesting output. Now, I can't say it wasn't a magic tool by any means. It wasn't a trading algorithm. It was part of what every VC does, which is to hunt, to search for great founders. And so any tools that you can use to help with that, is advantageous. And so we still had to do what every VC does. You had to get out into the ecosystem. That's where you and I met, right? And you had to connect with people at the local level, at the creation level, at the ideation level, and know where those people are and how they're interacting. And so Vestigo played I think an important early role in the Boston Fintech Week. Build the ecosystem, Mass Fintech Hub now, Sandbox, etc. Because
Absolutely.
we got out there, right?
Yeah. So how about that day in the life too? Like what?
Yeah,
like,
sorry.
up in the morning.
So just to come back to the data just really fast. So that evolved from machine learning applications to now using LLMs. So instead of a spreadsheet of 200 names that I get an email that would say, Ian, here's 5 companies that are showing the propensity of signal within, the sectors you're interested in. So we lived the machine learning, AI, and LLM journey. And I use, most popular models now, ChatGPT 5 and Claude on a regular basis in the work that I do.
Please come back to part 2 with Ian Sheridan as Ian goes deep into the day in the life of a venture capital founder, and also how teamwork, collaboration, and leadership with a great culture is what really makes the magic happen. Thank you for listening to What the Heck Fintech. Make sure you tune into our next episode as we continue to interview fintech leaders and share real-world stories from across the fintech ecosystem, so you can fully understand that fintech is fin life.